Am I audible?
Yes.
Yes.
Okay, fantastic. Thank you. It's indeed a privilege to be here, and thanks very much for having me. So over the next 20 minutes or so, I'll take you all through the role of technology services, interestingly in the way it is evolving, and it has evolved over the last few years, and the way we look at it. So if we could go to the next slide, please. Thank you. So if we break down the title into three segments, if you will, it talks about evolving, it talks about role of technology services, and it talks about FinTech. FinTech, of course, there are many people on the call who know much better than I do, but it's an exciting space. A lot has been happening. The way banking system has changed, the way financial services systems have changed, the speed with which things are changing is just phenomenal. And then the role of technology services in a way has been an integral part of the journey that the FinTech space or the financial services space have taken over the last 20, 30 years. So what we'll see is a bit of how some of these things have come up together and how we see some of these complex systems coming together in a bigger way in times to come. So we'll move to the next slide. Yeah. So at the top of the slide, you see some of the things that many of us are used to now, and it has become part and parcel of our day-to-day lives. I'm sure a lot of people who've used banking may not be the millennials though, but people who've consumed banking services maybe 20, 25 years back would have seen going to branches and waiting for an hour or two just to withdraw a few dollars. Of course, things have changed a lot since then. The consumption of ATMs, telebanking, net banking, all of that, all of these things are now part and parcel of our day-to-day lives. And what's one common theme? It's the leverage that these institutions have had on technology. Now, by some surveys, more than 70% of the users will use online banking services over the next 4 years or so. And that's a lot, right? And we just need to be mindful that we have a global population of around 7.77 billion. And if you take an approximate percentage, we are talking about over 5 billion people consuming technology services. So on one side, we've got the people who are consuming technologies, these banking services by leveraging technology. How do they consume it in a better way, more sophisticated way, making it more seamless for them? At the same time, the more important thing is how do we increase inclusivity? There's still 25% people who coexist with all of us on this planet who are not part of any banking system. And that's a significant number. How do they become part of the banking system? Not just for a feel-good factor, but what's important is the way it changes their lives. As we may know, that there are a lot of developing and underdeveloped countries where even the welfare funds do not reach because of the leakage in financial system. Now, the usage of technologies is somehow and in some form or shape is arresting this important aspect, and it's making it more uniform for the people to consume and get benefits of the welfare system. If we just move on from here to the next slide, please. Yeah. So what we see is, of course, the term FinTech was coined maybe sometime in the 1980s, but the fusion of financial services and technology has existed from the time these two terms have been in being. Now, if we just divide into two historical buckets, that is, let's say the first 50, 60 years from 1950 to 2007, and the second bucket being 2000 to now. The first bucket was about leveraging what we might today think of as basic technology, right? Using some of the mainframes, some of the basic technology components, connectivity to make things operationally more efficient. Usage of credit cards, which was reliant on networks, to the move to online banking, which was a big thing when it started sometime around the late 90s. Now, these were all big changes. But a very interesting phenomenon was that all these changes were led by more developed countries, mostly in the Western world. Now, from there, let's look at the shift from 2007. 2007, interestingly, is the same year in which iPhone was launched, 29th June 2007. So it's just been 13 years, right? But if we see the way smartphone has become part and parcel of our lives, it seems we've lived with it forever and we can't seem to live without it, right? And one major change that it has done is that innovation or change hasn't remained just with developed countries, the ones with resources. They have also moved to developing and underdeveloped countries and regions. You see a lot of innovation coming from China, a lot of innovation coming from India, ASEAN countries, Africa. And what's driving some of these innovations are the basic necessary requirements. I mean, as the phrase goes, necessity is the mother of invention. You see frugal innovation happening in all of these countries with much lesser resources. So this is a completely new trend that has happened in the last 10, 15 years, where suddenly you find some of the things that are happening in developing and underdeveloped world is far more advanced than what you see in the developed world. And then it is also helping the world become more flat than ever. We're talking about contactless payment, cryptocurrency, digital wallets, all of these things are happening at the same time and making the web a lot more complex, at the same time leaving a lot more options for the consumer to choose from. If we look at the simple graph on the right side, there's a very important message that it conveys. Just think of ourselves as normal consumers or someone playing some role in the entire financial services ecosystem maybe 15 years back. If someone had asked, how often do you see a new bank open? Not so often. Actually, if you look at the traditional banks, there are lesser banks now than they were earlier because of the mergers and acquisitions that have continued to happen, because it became too difficult for them to survive and they needed to achieve operational efficiency. So many of them merged together as well. But look at this count. In 2020 alone, we're talking about having more than 20,000 fintech startups. What does it mean? The entry barrier has really come down. Even one person sitting somewhere in one small corner in any part of the world can start an organization, can contribute to this financial services ecosystem, where at some point in time the entry barrier was so high that it was very difficult for anyone to get in. So this leaves a lot more options, but at the same time, not everyone would be successful, but reduction of entry barrier at least leaves it open for anyone to come in and play a role. If you go to the next slide, now this is something that many people who've been in the industry for long can relate to. On the left side, you see some of the names that have been there for a very long time, but there are some that have come in being maybe in the last 10 years or so. Now, if it was somewhere, let's say in early 2000s, if somebody had to implement a new software or had to buy some infrastructure, there were a handful of names to choose from. So one could just say, hey, I'm looking for this kind of application, and maybe of these available 2-3 options, maybe this is what suits me best. Someone who gives me the best technical solution, someone who gives me the best commercial proposition, and I'm good. Same is true for infrastructure. And it was seen as a support function. The whole technology stack, the IT function was seen as a support function to make sure that the processes are less frictional, they are automated, they become more operationally efficient. So it was kind of to support the main function, which was finance. In this example, of course, you could use the same example for any industry and it would have the same impact. When you look at the way things have changed in the graph on the right-hand side, somewhere around 25 years back, the IT services spend was close to $200 billion. And if you look at the current year, it's close to $1 trillion. So it has increased 5 times. Now let's put that in perspective. In 1993, the global GDP was somewhere in the range of 25 to 26 trillion. Currently, the global GDP is approximately 3 times of that, right? But you see that while the global GDP has increased 3 times, but the spend on technology has gone up 5 times, right? Which means the importance that every single organization, every single services has put on technology has gone up significantly, right? Let's move to the next slide. So in the previous slide, one of the key messages was around how technology was a support function for a very long time. We saw the FinTech historical data from 1950s, or you could take a time period even before that. But till recently, maybe 5 years back or so, it was still seen as a support function. A business person would go to the technology guy and say, this is what I want. And it was seen as something that, you need to help for me to run the business. But from technology being a support function, now we are moving to times where technology is business. It is the key differentiator to not just sustain, but also differentiate in the market space, right? And while I don't need to name all of these different blocks that form significant part of the technology ecosystem, but all of these are coming together to make not technology for business, but making technology as business. Now, you've recently heard of Hertz going bankrupt, right? And if you see, while a common imperative that people draw is that, oh, but these companies did not change fast enough with times. But when you peel the onion about not changing fast enough, what is one thing that they did not leverage fast enough? It was technology. When you look at the companies in the same space of the overused example of Ubers of the world, Grabs of the world, Lyfts of the world, they call themselves technology companies. And it is the same for any other company in FinTech space or any other space. So technology has become a business. The primary axis has become technology, and the secondary axis has become the domain that they serve, be it finance, an auto taxi industry, or hotel, or something like that, which I think is a tectonic shift, and it has completely changed the way businesses work. It has completely changed the way the consumers consume services. So let's move to the next one. Okay, so this is just to give an idea. We don't really need to read the names or look at the different logos, but this is to kind of depict that if any of you just do a bit of Google on, okay, which are the AI companies, you get hundreds and maybe in some cases thousands of options. Same way if we do blockchain, you get hundreds of options. Cybersecurity, robotic process automation, hundreds and thousands of options. So in a way, there is a bit of technology explosion. If you just relate it with the chart a few slides back, which had just a handful of technology providers to choose from, now there is a problem of plenty. How do I, as a consumer, or as a services provider, as a bank, as a FinTech company, choose the right technology components that makes the best sense for me? It's become very, very difficult. And if I don't make the technology choice, the right technology choice, and bring them all together in the best possible way, the sustainability becomes a big question mark. I may even go out of business, right? So if we just continue the story further, to the next slide, please. Yep. So it's a very complex domain to choose from. While we saw just 2 such domains of AIs and blockchain companies, but the moment you explore it further, you're talking about hundreds and thousands of companies, and that goes to the previous point that I was making around the entry barrier becoming really, really low. You could start with 1 or 2 people coming together and start a technology component that makes a huge difference. You might all remember WhatsApp, which has become part and parcel of our daily lives. When it was sold for over $20 billion, it had just 50 people. Who would have imagined 10 years back that a 50 people company would be valued more than $20 billion? So, and it challenged the huge telcos, right, who lost $50 billion in text revenue. No one pays for text anymore, right? So it's about, so many organizations, so many technologies companies coming to the fore and making the choices really, really difficult for the businesses. Let's go to the next one, please. And this is where the role of technology services companies or system integrator comes in being. Right from the choice of what is the right technology choice, how do I take care of my infrastructure? What technology should I implement? What application should I implement? What should be the whole ecosystem like? Now, one interesting aspect is that if someone had asked about the role of a system integrator or a tech services company maybe a few years back, the chart wouldn't have looked too different. The chart would have still looked pretty much the same. 70–80% of the things would have remained the same. Maybe the term digital transformation did not exist, but by and large, they did the same thing. So what is the difference? Is the difference of the volume, the speed with which things have become so much more complex, right? If we just take one component of technology consulting, remember, from a few choices, 3–4 options to choose from, we're talking about hundreds and in some cases thousands of options to choose from. And with the world becoming flat, technology being easily available, anything that you develop or innovate in one part of the world is easily accessible in any other part of the world. So let's move to the next one as to how it is all coming together. Thank you. Some of the challenges that many of these financial services companies, the fintechs, or the banks are facing have continued, but the time to react has come down drastically. Drive for growth was always there. Every single organization from the time of its existence had the drive for growth. But one thing which people are getting challenged by is the ability to become profitable. You look at so many new age companies burning cash day after day, month after month, year after year, with the hope that someday they will become profitable. But the ones that are really successful are the ones who are able to become profitable. So having growth is not enough. Sooner or later, they have to have the path to become profitable. Otherwise, the journey will become unsustainable. And there is immense cost pressure. If you look at the large banks or large financial institutions, they cannot afford more fat than they used to have earlier on. And they have to cut it down because there are more agile players who are coming with immense speed to kill their business. They have to react very, very fast. Then we are living in an age of massive interconnected ecosystems, right? Everything is connected to everything. So many companies are leaving their core businesses and becoming something else. Look at telcos, for example. Now, they are doing so much more than just voice dialing, which we were all used to maybe 15 years back. And all of it is so much more connected that it makes it on one side convenient, but at the same time immensely complex. And the expectations of customer experience are more than ever. There are some studies that say that if a consumer logs into a website or an app, in 3 seconds, if it doesn't load up, they just exit. They just don't want to wait. How many of us have the patience to wait for a call center to pick up the phone and resolve our problems? Even in a minute or two, we start getting impatient, right? And then this is also made even more difficult for the service provider with increasing compliance. And compliance providers are also having difficult times because the speed with which things are changing, even they are not able to scale up. And all of this, while we're talking about a lot of sophistication, is making it more security prone, right? Because one weak link somewhere in the hyper-connected system is making things really, really weak. And while we're talking about many of these business challenges, the big difference between the time maybe 5–10 years back to now is that the time to react is very, very low. A company like WeWork, from it being a darling to it being a big liability, happens within no time, right? The time to fail has come significantly down. So having good talent is unfortunately not enough. Being able to put technology to use in the fastest possible manner, in the most efficient manner, has become a necessity, not a luxury anymore. So let's go to the next slide, please. So where does the role of a technology services provider come in being? Now, on one side, it's very easy to say, oh yeah, I know a company like SAP, I know a company like Oracle, I know a company like, let's say HP, AWS, because you can see the product, you can see the platform, you can feel it, you know about it. But with so many names that I have not even taken, hundreds and thousands that we've discovered in the last few slides, you need a trusted advisor. You need someone to help make the right decisions, which is right for your business. And by the way, this keeps changing as well. What's true today, maybe 3 months from now, business dynamics would have changed and you would need to have a different option. It's like having a doctor, right? Some of the symptoms that we mentioned, that somebody having a higher cost, someone needing to react in a more in a faster manner, someone need to comply. You need technology to be able to do things in a very, very fast manner. You need to help fix the problems, predict the problems, fix them ahead of time. And that's where there is a need for a doctor. So remember, some of these technology platforms, some of these software or hardware providers or cloud providers, these are like different solutions, right? These are like different medicines. These are like different pills or things like that, which are there. But how to consume them, you still need a doctor to advise. Some way to look at it is like a chef, right? Wherein you say that, look, I have this X business objective, and these are thousands and millions of components which you can think of, ingredients. For me to have the right dish that I want, these are the different components that need to come together and in the right proportion at the right time so that I can achieve my business objective. You can think of it like a fitness coach so that you can stay in business ahead of time, remain relevant, remain agile, and of course much more. I have just tried to simplify for the audience so that they can relate the role that a tech services companies play in different shapes or form in bringing it all together, the different challenges that you're talking about, the different evolutions that we are seeing of financial services, fintechs, technology companies. Somebody has got to bring it all together. Somebody has to be the glue. And that's where the technology services role have evolved from being a supporter to someone who's driving the business directly. If you go to the next slide, please. So this is the second last slide. Now, it's an oversimplified version of how the whole ecosystem looks like. While you see some of the stakeholders in the entire ecosystem, these are thousands and thousands of fintech companies. There are technology component providers from blockchain, cloud, AI providers. There are a lot of software companies. There are cybersecurity. And then you've got the financial institutions, you've got the banks, you've got the financial services companies. And there is a many-to-many relationships, which means the banks, the financial services, the fintech companies can go to any of them directly. The banks can work with the fintech companies, can compete with them. Fintech companies can possibly kill some part of the businesses if the banks do not change fast enough. But there will be a coexistence of all of this together, and the one which is fittest will continue to survive. And that's where the role of technology services companies come in being, in playing the orchestrator role, in playing the glue role to bring it all together in a very, very dynamic manner. So hopefully that gives you a perspective of where the technology services provider role is right now and where it will be in times to come, and how it has changed from being a support to being leading the companies to help them differentiate, to help them remain in business in current challenging times. With this, we move to the last slide before I finish. So this is an important message that I think we all need to make note of. That, and it's a statement that I really like, and it's quite apt by Rupert Murdoch, that the world is changing fast. Big will not beat small anymore. It will be the fast beating the slow. I think it's very, very profound. And what does it take to be fast? I think the winners will be the one who leverage technology the best. So with that, I end my note. Thank you very much. Sorry, I took a few more minutes than allocated to me, but hope I was able to convey the role of technology services and the way it has evolved and the way it will continue to evolve. Thank you very much.
Thank you. Thank you very much, Mr. Atul Babu, for your impressive and in-depth introduction of your point of view. And also, I think it's very inspiring because a lot of audience who are watching our online webinar are CEO of some companies. After hearing your speech, they may have some new ideas of the future development of their companies in this area. Now we will turn to next session, that is question and answer. We will have the panelists asking questions for you. And the first we will turn to Professor Ben Shenglin. Professor Ben Shenglin is the Dean of Zhejiang University International Business School. Hi, Professor Ben. You said before that you have a very quick overview of the slide of Mr. Atul Babu. And after hearing his speech, what kind of new ideas come out of your mind, and what kind of things you want to exchange with him?
Okay. Thank you, Huji and Atul. I thought it was a very impressive presentation, and as an ex-banker for about 20 years, I had the personal experience of seeing how technology has changed the way that the banking dynamics was working on. The people who were on the IT side was almost invisible at the beginning of my career. And when I left JP Morgan Chase in 2014, they became the dominant department in a sense. Okay, so I can see that the evolving role of technology in the financial services. I like the way you put like why 2007 was like almost like a milestone, like FinTech past and FinTech present. And I thought, first of all, I didn't realize that you used the iPhone. It was almost like turning point. Indeed, actually, smartphones were actually a very important and impactful force in that. I thought, before you talked, I thought it was like before the financial crisis in Wall Street. That was a couple of comments. One is about the number, about the APAC, EMEA, and North America FinTech startups. I thought APAC number was a bit probably understated, I believe. Maybe I'm biased. I'm from China. I'm from Asia, so I thought we had a lot more startups than EMEA and North America. But that's just the one comment. Secondly, I like your last slide about small and the big, fast and slow. And it's the fast who will beat the slow. And because it echoes to our situation, Zhejiang University International Business School, we are small and new business school, but we are fast. So you are giving us the encouraging sign that we are going to be successful. So Jerry is sitting on our faculty. So Jerry looks like he made the right decision joining us. I got two questions for you, in case for you and for others. First of all, are we ready to enter the FinTech future? Because we had like 2007 as the FinTech past, FinTech present. Are we already in the FinTech future? Is the future is ready? Is here? That's one. If it's not, when? Secondly, your slide about the the technology explosion, the AIs, the blockchain, a lot of very busy slides. It's complex, okay? In banking, when we used to sell products to our clients, we say if we can't convince you, we're trying to confuse you. But now, like the technology service provider is trying to confuse us if they can't convince us. And Jerry used to be the CTO of State Street, and I then was working at the HSBC on the CEO side. I'm sure for them it would be difficult to pick who is the right and credible service provider. And I would also like to hear their perspective. And in the meantime, Srini is the CRO, Chief Compliance Officer. Anything that we do nowadays is to sign off from compliance. If they want to procure something from a service provider in technology, what sign-off Srini are you looking for in terms of getting the compliance okay? So this is a long comment and a couple of questions.
Well, thank you, Professor Ben, for your very kind comments. I'm very grateful to you for your kind comments and listening to the entire talk so keenly. Thank you very much. So let me try to comment on the 2 points that you made. First is the future here. I think it's a matter of perspective, and I'm an optimist. So I generally look at the positive side first, and in general also, not just in this case, absolutely the future is here. And it will continue to be there because there are so many things to look forward to, right? And what gives me a lot more motivation and belief to be convinced of this statement is look at the number of options and look at the way it is changing the lives of people, right? Just I grew up in India, and I can see the way it is changing the lives of people. Corruption still, unfortunately, is a big problem, but technology and the way some of things that we talked in this presentation is making difference in the lives of people. The social welfare schemes, it was not reaching the right set of people. It was getting leaked in the whole supply chain. Now, with mobile becoming the bank, I don't have to visit anywhere. I don't have to take physical cash. If there is no physical cash, which means the chances of leakage comes down. Because for corruption, one big instrument is cash. If you take cash out of the system and you make it digital, how do you do it, right? So I think the future is certainly happening, and it's making a big difference to everyone. And that's why I'm very positive about the statement that I mentioned about how do we make the remaining 1.7 billion to 2 billion people who are not part of the banking system, because this will be life-changing for them. For us, using a bank is a part of day-to-day lives. It really doesn't make too much of a difference, but for them, it changes their lives. So yes, I kind of support your statement about the future being here. The second one, I can relate with what you mentioned about, if you can't convince someone, confuse you. I think the interesting part and the change that has happened from that statement is that if you try to confuse people, people will not come to you again because they will have somebody else to go to, right? So it worked for some time, but unfortunately we live in such a high scrutiny world, hyper connected world, that if you try to do something that's not appropriate, you won't survive, right? So that kind of puts positive pressure on everyone involved, right? And that's where, I'm grateful that you like the statement about fast beating the slow, which means that even if there is an organization with 400,000 people, an organization with 50 people can beat them if they have the right thing to say. So I would say it's the intention to confuse would not work, but making sense of this confusion and being able to tell in the simplest possible form is going to make a difference. So those are my 2 comments. I hope I was able to answer your questions.
Thank you.
So thank you, Professor Ben Shenglin. Are you confused now, or is
no,
it very clear for you now?
I want to get some perspective from Jerry and Dan
okay.
and Rini.
Okay. So thank you, Professor Ben, and thank you for Adul's answer. And then we will turn to Jerry, Professor Jerry Christopher. Do you have any perspective?
Yes, on thought of confusing, your clients, I would always ask them, how many days of the week begin with T? Today and tomorrow. So we live for today and we're creating a future tomorrow. In the financial services space, our goal was to, help create wealth for, the average individual, our clients, as well as to help protect them. I think there's going to be a big shift, in this COVID-19 world. I don't think anybody would have expected Zoom to basically turn Skype into a verb that nobody uses. You say to your friend, hey man, let me Skype you. Cool, send me your Zoom link. So I don't know of the 20,000 companies, how many of them have went through, are going through this kind of process right now. In terms of FinTech, I think companies will need to be more focused and have a local strategy. I think that's going to be what this environment that we're moving into. The kind of projects that we're working here at the university lab is focused around self-sovereign ID, AML, KYC, utility tokens for customer and employee loyalty engagement programs, and then the use of security tokens. I'll stop there because I could talk for a long time. I'll turn it over to Srinivas and Daniel to hear their comments.
Okay, thank you, Jerry. Now let's turn to Mr. Srinivas Yahaman. Hello?
Yeah. Hi.
Can you hear me? Yes. It's your turn to give us your perspective.
Yeah, thank you, Huji, and thanks everyone. And it was a very nice presentation, Mr. Atul, and I was really actually looking forward to this discussion because I have been so far talking about FinTech and TechFin. So that is the kind of discussions we had several times. But now I have a different perspective in terms of how tech is relevant for either FinTech or TechFin. So I was actually looking forward to your slides, and I went through them, and especially the slide number 10, where you started mentioning about how the considerations from growth to cost to interconnectivity to customer experience, and then you come to compliance. So since my core area is for compliance, I may not talk about most of the business part of it, but I will take your line, technology for business to technology is business, which is making its relevance both for regulation and compliance. And we all know, basically, we already spoke about anti-corruption, anti-fraud, and anti-money laundering. At one point in time, we used technology for supporting the manual transaction monitoring and manual KYC processes, know your customer processes. But now we have got the technology which is like a digital identity, which is replacing your manual KYC process. Also, we have got the natural language processing tools, artificial intelligence, which is helping a big way, replacing the manual way of monitoring the transactions, and big data, which is also helping in anti-corruption. And we have got the new technology tools like WeChat, electronic PAPIO for prevention of corruption, Aadhaar-enabled payment services in India. So a lot of things are happening, which are rightly mentioned, not only in the business context, but even in the compliance context. And in a regulatory context, I think the big change is yet to come. Like one small example I can take is currency management. If we divide currency management from a regulatory perspective into three parts: issuance of currency, distribution of currency, management of currency. So far, we have only seen technology getting into management, technology getting into distribution of currency. But I think the world is now embracing into even issuance of the currency by the regulators, by the central banks through CBDC, which is what we are seeing in China, the digital currency electronic payment. And once that comes, I think we are now heralding into a new world of entirely converting the offline thing into online. And even we are seeing a lot of initiatives of Bank of England, for instance, not only making rules for technology, but also making rules in technology. Like there is a machine-readable regulation which the Bank of England is working on, so that if the machines are going to perform most of our financial services, then how to make machines regulate their activities. So we need to have machine-readable regulations. So I think broadly what you said, I would like to support your statement, technology for business to technology is business. And in my own area of regulation compliance, I see that is happening. So I think I learned a lot in your presentation, and I just want to stop my comment here. I have only one question, basically to say, if that is the case, we know either the TechFin or FinTech have so far come to this stage of life, basically because of something called as regulation. So it is like not only the growth of these financial services made everything possible, but also the growth which is also to a large extent nurtured and nudged by the regulators. So my only question is that if now we are going to get into a technology which is all-encompassing, so who is going to regulate this technology? So it can't necessarily be financial regulators, or it can't necessarily be the government per se, because we need an expertise regulator to do such kind of regulation. So who do you think in such kind of, say for example, scenario is better equipped to regulate? Because we are seeing some companies which want to move fast and break things. So if you move fast, there is also a possibility that they may break things. So how do we ensure that the fast not only be slow, but they also doesn't break themselves? Yeah, that's all. Thank you.
No, thanks, Dr. Srinivas. So maybe quickly responding to the point, I think the government regulation, at least in the foreseeable future, will continue, because you know, that's the kind of the body that every person trusts, right? And they are supposed to take care of the interests of everyone. So I think at least in the foreseeable future it will continue. But some of the technology evolution will also help reduce the burden of regulation. For example, Professor Jerry talked about self-sovereign identity. I think that is a very, very fundamental and profound change, right? And that's of course one of the use cases and subsets of blockchain. And that's going to make a difference, which means the number of things to be regulated would also come down. If I'm able to self-sovereign if I'm able to control my own identity, I really don't need to take my, let's say, a passport or some instrument like that to a bank or for some payment, right? So I think with evolution of technology, maybe the things to be regulated will change, but as far as I can see, it has to be a government-like body or a multilateral body that will continue to kind of play a central role. Thank you.
Okay, thank you for the answer. Okay, and thank you for your question. And then we will turn to Daniel. Yeah, Dan.
Yes.
Do you have any questions for him?
So I want to thank Atul, first of all, for the very interesting presentation. I think I'm with Jerry a little bit. There were so many things that we touched on. We could talk about it for quite a few hours. But I want to highlight a few things that kind of caught my attention. Okay, so the first one is around the definition of a fintech company, right? And I think it's worth kind of highlighting that there are basically two types. If you think about it, there are the companies that are trying to serve the large financial services organizations. And then there are also the other type that are trying to leverage technology, but basically serve the customers that today's financial services organizations are dealing with, right? So I think those two are actually quite different. And to distinguish them makes a lot of sense, because I think the ones that are trying to service the customer directly, they start from scratch, right? They have no technology legacy, and therefore they don't have to be as efficiency obsessed as some of the traditional companies. So if I think about the large companies that I used to work for in the past, cost income ratio was always a big topic, right? And it's always about how do I squeeze out a little bit more efficiency, right? But if you look at those fintech companies that are, to speak in your words, a little bit more like a WhatsApp, they start from a clean slate, and that's what gives them opportunity to also grow very fast and leverage all of the novel technologies that you also talked about. So I thought that was worth highlighting. The other thing I wanted to say is, and I've worked in technology for most of my life, but what I also realized is to be fast, technology is not enough. Because I think there's one additional component, and I think it also goes quite nicely with the mission of the business school, is I think people have to readjust, and perhaps some of the principles that we used to live by in the past are not so suitable anymore, right? And I'll give one example. In the past, in banking, we used to try to manage risk by defining very specifically and often in very thick documents how we were going to do a new project and how we're going to implement a new product. Right? And then people like Ben, who were in the front office and had to run the whole thing, had to sign it off. And then Ben, I don't know, but how many of those 150-page documents did you read? Very questionable. So then what we see now, right, is fantastic, because there's a move towards experimentation. where we do smaller steps and we say, okay, maybe if we can work across departments, we can do experiments, sign them off, and then move on to the next level, right? So I think that is also an interesting development. Two more things. I won't steal much more time, but the one thing that I wanted to say that is perhaps in favor of traditional financial services companies, because we spoke a lot about how cool fintechs are, is traditional companies today still have two things that often fintech companies don't have, and that is balance sheet, and secondly, also a bit of a regulatory mode. And if it's not a regulatory mode, it's perhaps people like Srinivas who understand financial services regulation, right? So this is my call to fintech companies and founders to also invest a little bit in understanding the regulation that is out there today, because it is a necessary requirement to operate a regulated business, right? And the last thing, and then I'll stop, because I really thought there was so much in your presentation, is I just want to also highlight, to me, the whole blockchain topic goes beyond only being a technology. So while in the beginning we have opportunity to perhaps solve for trust issues, or perhaps squeeze out some efficiency gains because we only have one consistent data set, I think in blockchain there's a lot more in there, because there's a whole economic system inside of some of these blockchain protocols that is obviously worth exploring more. And if I hear Jerry talking about utility tokens and security tokens, then I get very excited, because that is something that I'm also researching. So thanks again for your fantastic presentation. Thank you.
Thank you, Daniel. Thank you.
Okay, it seems to be your comments on his presentation, and thank you very much for your own idea on this area. And now let's turn to Dr. Chen Hongyi. Do you have any question?
You're on mute, Dr. Chen.
Okay.
Okay.
So thank you very much for Adu, your wonderful presentation. And I just have a question, and from the students' perspective, because as you know, now I'm leading the Master of Finance FinTech program. And in the last few weeks, we interview like 30, 40 students, and they come to me and are very anxious with their future. So I spoke with Dan a lot during this day to see how should we really educate these students and the young generation. So from your perspective, as Srinivas mentioned, that TechFin and the FinTech, now we are witness and seeing that the financial industry is changing and being redesigned. So from your perspective, what do you think that the student they should equip, what kind of the skill set they should equip for their own, or maybe in terms of what kind of universal philosophy they should keep in mind for facing this rapidly transforming and changing society?
Thank you, Dr. Chen. Obviously, it's a very deep question, and maybe I'll try to give two kinds of answers. Okay. One more philosophical, and one that could be actionized on. The philosophical answer is more towards, if I have to give a suggestion to the students, it's more around learnability and unlearnability, right? Because it's extremely important for each one of us to not just learn, but unlearn and relearn, because the world is changing so fast. Today, I could give, let's say, a list of 5 things or 10 things to each of your students that, hey, why don't you, learn some of these things? But none of us know what will emerge from which part of the world, and suddenly half of those things, or maybe all 4 or 5 things, will become irrelevant, right? But anyone who's got the learnability aspect that, okay, I knew certain things, not relevant anymore, let me forget about it. And that's where I'm referring to unlearnability, and relearn the new things, right? That I think that philosophically is very important. The second aspect, which is something to act on, is, of course, I won't get into the specifics because there are so many sub areas that any student can get in. But I will go back to a statement that great Steve Jobs had mentioned, that he operates on the cross section of arts and science, right? And I think for the people who want to have their careers in fintech, they have to choose the right cross-section of finance and technology. These are all huge areas in themselves. And I'm probably oversimplifying, and I apologize for that. But it's about picking one section which kind of makes a deep impact, and then a huge variety of components which kind of influences each one of them. So if I could convey this in the right form, it's like thinking of a T, right? Which means they have to know a little bit of different things. I mean, remember the thousands of components that I mentioned in one of the slides. So one has to at least be aware that, oh, by the way, this is happening, this is happening, this is happening, so that one could relate and pick the right components. But there has to be one deep area. Now that deep area could be, okay, I just want to do microfinancing. Now, if that deep area is microfinancing, knowing those different components in the form of T, I think is very important. So rather than giving them a prescription, I'm kind of showing a path that hopefully they can pick up and choose what's valid for them. I don't know if that answers your question.
Right. But I'm sure maybe next time, after the time of crisis, we will be very pleasure to invite you to our campus to share more on that.
Absolutely, would love to visit. Absolutely, thank you very much.
Okay.
Thank you very much for Mr. Atul Babu's answer, and thank you for the panelists' question. And then we will turn to the audience, because during our webinar, a lot of audience who are watching online have their questions, and we have selected some. Let me ask you first, what is your comment on digital e-wallet, that why most of the bank is not participating instead of a newcomer?
Yeah, so I think one of the reasons is, I mean, it's like, you know, having a big ship, and I think this is a comment that, similar comment that Daniel mentioned, that, you know, what are the strengths of a large company, right? While Daniel gave the example of balance sheet and being regulatory oriented, but it's also true that sometimes changing something is very difficult. So digital wallet, of course, I can't say that the big banks are not doing. There are many examples of banks doing in many countries. So it's not that it's not happening, but I think it's a choice that every bank is making, that look, whether I'll be able to survive a digital wallet in a profitable way or not. And the point, I'm going back to the point that Daniel mentioned about balance sheet, because they want to make sure that there is a solid balance sheet. They are able to regulate everything. They have much to lose, right? So the risk of doing a digital wallet maybe in some cases is too high, and that's why they are refraining from doing it. They would rather collaborate from such people. So I wouldn't say that they are not doing, they are doing it, but they are being more cautious before just jumping, unlike you know, a startup who've got nothing to lose, and they feel that, you know, regulation can catch up. So it's also an integration that the large banks can do with such digital wallet companies, which works for them better than them starting and creating the services by themselves.
Okay, and it's also, we have a question from TMT Post, who they said, what's the optimal form for future banks? Is it open banks? So the form for future banks.
Look, I think,
looking forward to the future.
Yes, that's certainly one of the forms. I think what will happen is the coexistence, right, of different forms. There are still different objectives that people want to achieve, and we have to remember that we do not live in a homogeneous world, right? Some of us who've got the privilege to use Zoom, there are many people who would not even know that such a thing exists, right? So it's the same thing that, you know, for someone is still visiting a branch, is still having someone to talk to and get the money transaction done is still a future, right? Because they're not even part of the banking system. For someone, open banking is. So I think all of it will coexist, but the some of the challenges and some of the issues that I talked about will continue to drive them to remain agile. Just because I have branch doesn't mean that I will survive. I have to have it in the right form to be able to sustain the business model. So in summary, I think there'll be coexistence of all kinds of banking in the foreseeable future.
Okay. Seems that a lot of questions that audience want to ask, but time is limited. So we come to the end of today's webinar. And thank you again for, it's okay? Okay, thank you again for Mr. Atul Babu's wonderful speech and your answer to the questions to the panelists and to the audience. And thank you everyone for joining us today. Thank you for the panelists. And before ending, we will invite Dr. Chen Hongyi again to forecast next week's webinar. Okay, Dr. Chen.
Okay, so thank you very much again, once again, for Atul and Ben, Jerry, Srini, Dan, for all of your effort for putting today's webinar so engaging. So also thank you very much for those following our webinar on the internet. So as you know that this FinTech Soul Leader webinar series, we continue almost every week. So next Wednesday, the 3rd June, we will invite Professor Naoyuki Yoshino, the former dean from the Asian Development Institute, and he will share the topic on the development of FinTech and financial education. So should that topic fit your interest, please join us together again. So thank you very much.
Okay, thank you. Thank you for your support. And let's looking forward to the next time. Bye-bye.
Thank you, everyone.
Thank you, everybody.